Standard Bank reporting record headline earnings, over 26 billion rand in the first half of the year, 10% higher than the same period last year. The South African division doing very well. The bank also investing heavily in AI, so is everyone else. But I think in banking, it really is going to tell how you get that investment right or if you don't. Sim Tshabalala is the Group CEO at Standard Bank. Sim, good evening. Thanks so much for the time tonight. A very strong period with you. You must be quite pleased with it. Your gross loans and advances to customers in South Africa grew by 5%. Are you still seeing quite strong demand for credit, or are you maybe taking market share from some other people?
Good evening, Stephen. Yes, that 5% growth in South Africa is actually a tale of two cities. The retail part of the business, as you saw in private sector credit extension, household credit extension is slower, whereas in the top end of the market with corporates, it's significantly faster. But that resulted, as you saw there, in net interest income being up by 7%. There is activity, if I may just make that point, and that activity is centered around energy, logistics, the power sector, renewables, broadly infrastructure, and all the businesses that support that activity.
Your credit impairment charges were down 12%, and you've obviously been able to cut down on your bad debts. How did you go about doing that? I mean, you obviously want to make sure people pay you back what you lend them. At the same time, you know that you have to lend to actually make money out of the practice. How were you able to cut down your impairment charges quite significantly?
Even Standard Bank has a tradition over the last few cycles of staying consistent in its risk acceptance criteria and not shifting them back and forth. Put differently, even during COVID, we stood by our clients. And so the result of all of that, as interest rates declined and as inflation declined, we saw early arrears reducing. So the period where people failed to meet their obligations in the period 1 day to 90 days. And then our non-performing loans have also started to decline, which bespeaks a healthier balance sheet and customers more confident in meeting their obligations. I mean, just one interesting statistic, in the home loans business, your credit loss ratio was 67 basis points last year. This half, it was 55. And that trend is similar in vehicle and asset finance, in the card business, and in other unsecured loans. It's a healthier customer, even with all the challenges in the Middle East.
I mean, it's slightly surprising in a way that it's a healthier customer, but maybe people have had a chance, just a brief stab to catch their breath a little bit, or finally people are beginning to plan a little better. Financial education in South Africa has exploded over the last 30 years.
It's a combination of all of the above, Stephen. Stronger balance sheets by clients, people maintaining and keeping their jobs. People are now through the first and second cycle of the credit cycle, better experience, more confident in managing their financial affairs. Absolutely.
You say you're investing quite heavily in AI, and you're obviously spending quite a lot of money there. We all know what can happen if an IT problem affects a payment system for a bank of your size. What impact is AI having on your group at the moment? Are you already feeling an impact in some way?
Yes, we are. And I can make it personal. I use Claude and as well as Perplexity to deal with emails, write speeches, work with my team on presentations, do research, prepare briefs, and so forth. And it's made me significantly more productive than otherwise. I'm one of 39,000 staff who are on these Gen AI, Claude, Perplexity, and so forth. It is calculated at a higher level to improve customer experience. So we've got use cases that are specific towards helping relationship managers, call centers, and so forth. Secondly, to improve efficiency, reduce the cost of product and service delivery. And then thirdly, improve our risk management. We use it in risk management as well. To put it differently, Stephen, it's a general purpose technology. It's like the steam engine, water, the computer. If you don't do it, you're going to be left behind.
Do you think it might, in the next couple of years, lead to you using fewer workers? You won't need as many people?
No. I believe in the Jevons paradox, that as you put these technologies in place, you're going to require more human capital. Think about ATMs in the 1980s. everybody thought that there'd be a diminution of tellers. Well, there was an increase globally of the use of tellers. Or think about the horse cart and the car. The same skills necessary to build the carriage are the same ones as you need to build the interior of a car. The same concept. So we're of the view that yes, there will be massive changes, but there will be a greater need for humans.
Mm. Over the last sort of year or so, Sim, you've lost some of your top talent to, they all seem to have gone to the same place. I don't know if they all had a lot of red in their wardrobe they wanted to wear or something. It does look like that is over, but that must have been quite irritating to see so much top talent leaving like that.
Stephen, it's never pleasing to lose people that you work closely with, and it's also never pleasing to lose talent that you've invested in. But we take a similar view to Goldman Sachs, that it's important for you to retain good relations with people that leave because they're alumni. They may be competitors, but they partner you in industry, in global issues, in risk issues, and so forth. And you hope that over time, the situation in the country, the competitive situation improves. It's good for your clients, and you then also improve. So yes, it's an annoyance. I wouldn't lie and lie to you about that. But it's also good for competition. It's good for the country.
Going forward, you seem quite confident that interest rates in South Africa will drop by a full percentage point over the next year. Inflation is quite high now. Where's that confidence coming from?
It's based on, firstly, inflation expectations and the modeling, Stephen, and the work that the authorities are doing to manage inflation expectations.
Sim Tshabalala, really do appreciate the time. Thank you very much indeed. The Group CEO at Standard Bank.